Barclays sets aside £800 million for Forex penalties. Thank you for joining us for another Bank of Cardiff newscast. Beleaguered British bank Barclays has had to set aside another £800 million as it prepares to settle a fine for rigging foreign exchange markets and to pay yet more compensation for mis-selling payment protection insurance, or PPI. The bank expects to be hit with a total of around £2 billion worth of penalties from regulators in the UK and the US, which are investigating the manipulation of the £3.5 trillion a day Forex markets. Other banks have been fined £2.6 billion for the offences so far, but Barclays pulled out of November's coordinated settlement at the last minute. The figure was released as Barclays reported a 26% drop in quarterly statutory profits to £1.34 billion. If one-off items are excluded, including a further £150 million for the PPI settlement, however, adjusted profit actually rose 9% to £1.85 billion. Barclays chief executive Anthony Jenkins has been trying to restore the bank's reputation following the £290 million fine for LIBOR manipulation in 2012. He says, "Resolving legacy conduct issues is also an important part of our plan to transform Barclays." He continues, "We're working hard to expedite their settlement and have taken further provisions of £800 million this quarter, primarily relating to foreign exchange." So what about moving forward? The bank's finance director, Tushar Malaysia, says the new figures reflected, quote, "the further discussions that we've been having with a number of regulators and agencies around the world across multiple jurisdictions, and it really reflects our best estimate of the full cost of these related matters." New Barclays chairman John McFarlane took the reins from Sir David Walker last week and has already contacted shareholders to convey his determination to settle the issue once and for all. The letter reiterated his intention to, quote, "get the errors of the past behind us to achieve a satisfactory rate of revenue growth, greater cost discipline, and a more dynamic reallocation of capital." He further acknowledged that while progress had been made, quote, "a great deal still needs to be done." Barclays has pared back its investment banking division and is focusing its efforts on retail banking. It is in the process of cutting 19,000 jobs, reducing costs and selling off unwanted assets. So, are more controls needed? Last November, HSBC, Royal Bank of Scotland, UBS, JP Morgan Chase, Citibank, and Bank of America were all fined for colluding over the price of various currencies. Groups campaigning for increased regulation of financial markets have long argued that the number of penalties issued in recent years prove that banks need even greater monitoring. Here's a quote. Guess who said it? "The sheer scale of Barclays' provisions for ripping people off and fiddling markets is staggering. It's a disgrace that such industrial-scale scamming has become the norm in the city. It's bad for banks, and it's bad for Britain." A quote from David Hillman, spokesman for the Robin Hood tax campaign. That's all for now. Join us later this week for another Bank of Cardiff newscast. And remember that all our newscasts are available on our website, www.bankofcardiff.com/newscasts.